Welcome to this week's update on the hedged option portfolio. This week has been super interesting to trade for obvious reasons. The US election was yesterday, and early this morning it became apparent that Trump had won, which Bitcoin certainly benefited from, setting a new all-time high of just over 75,400. While the result was still less clear, the implied volatilities for this week's expiries were sky high. I saw the 6th of November expiry reaching over 140 at one point, and it may have gone even higher. However, once the result became clear, the uncertainty dissipated and the vols came down significantly. Tomorrow's expiry is now under 60. And if we look at devol, we can see that volatility in general just came down. This is the current portfolio. You can see the delta is quite negative at the moment. That's because we've got some calls that have gone in the money. We'll adjust that shortly. But the theta is decent. The theta yesterday was actually well over 200. And that was just because the implied volatility was so high and we got to sell quite a bit of that. As I mentioned in previous videos, the plan for this election week was to sell the high vol in the election expiries and use the credits collected to add some more protection in September. On the put side, you can see that's exactly what I did, as I've now got some long puts in September. You can see those on the chain as well. On the call side, instead of adding some long calls in September, I just reduced the size of the short leg in the June bull call spread. You can see that here. So the short leg here is now only 0.2 in size, compared to the long of 0.4. The reason I chose to do that was simply that the amounts lined up nicely with the credit I was collecting, and I wanted to spend roughly the same as I was collecting in premium. So this week went pretty much according to plan, and the equity is up nicely, currently sitting at all-time highs in both Bitcoin and dollar terms. And you can see the margin usage is also very low, so the account's in a very nice state at the moment. So despite having a couple of calls that are in the money at the moment, the margin usage in the account is still very low and everything is covered with longer dated positions. So I'm not concerned at all that the calls are in the money at the moment. I'll just roll them when necessary. If we're still around the same prices tomorrow, for example, I'll roll the 72k call from tomorrow's example out to next week, next Friday probably, which will be the 15th. And I'll roll the strike up as well, so it's at the money. So I'll probably roll that to the 74,000 if we're where we are now tomorrow. So as I said, the delta is a bit negative at the moment, and it's time to sell some more puts in the 8th expiry. I do have a short put in the 7th and in the 8th already, but those are the only puts I'm short at the moment. And as we saw, I've got plenty of tail risk cover to the downside, so I don't have to worry too much about selling more puts. So for tomorrow's expiry, I'll just do what I normally do, aim for the 30 to 35 delta. This $73,000 put is about right. The delta is about 31. And I'm going to try and sell 0.2 of this actually, and I'll use some of the credit to close the other puts. We can see the put I'm holding for tomorrow. I mean, it's miles away, so we're very unlikely to get there. But also I can probably buy this back for a couple of basis points, so we've already made, most of the profit we possibly could. So there's no reason to hold the risk really if we're adding more size now. I'd rather hold that size closer to the money where I can get a larger credit and my theta will also be higher. So I'll just wait for these to fill and then go and close that afterwards. That will also have the benefit of increasing my delta, which at the moment is a little too negative for my liking. I'm not in a huge rush, so I'll leave it at 80 for now, see if I get a fill, and then I'll adjust it if the price moves too much. And there we go, we got filled on those new short puts, so I'll just go over to the 7th expiry and close this, hopefully for 2 or 3 basis points. Well, 2 didn't get filled. Let's see if we get filled at 3. There we go. So we've got filled at 3 basis points on that one. And I might see if I can close this as well. There we go. We've got filled at 11. So with that adjustment, I've I was short 2 puts and I'm still only short 2 puts, but I've collected a nice credit and I will have increased my delta by quite a bit, because the delta of this one was only 5, whereas these are 30, and the delta of this one was probably barely 1. It was one of these. Yeah, so that's adjusted my portfolio to be more closely aligned with what I want it to be. The delta is still negative, and that's because of the 2 calls that are in the money at the moment that I'm short, but that's fine. One of them I'll probably roll tomorrow morning, assuming it's still in the money, and the next one I'll roll on the 8th. And you can see the theta's increased quite a bit there. I think we were at something around 40 at the start of the video, and now we're at 87. So that's at quite a nice level as well. So it's more of the same in terms of strategy, just selling short-dated vol, covering it with longer-dated positions, rolling when necessary, all the usual stuff. That's it for today's video. Thanks for watching, and I'll see you next time.